but let's bring in Scott Bauer, the CEO of Prosper Trading Academy, joining us here this morning to take a look at this number. Scott, we were talking about how the Delta variant has been providing headwinds to, well, not only consumers, employers, businesses in general, and, well, we're starting to see a reflection thereof. Now, I do want to point out that it looks like prior numbers got revised up a little bit higher, so that might mute some of the disappointment tied to, it looks like across the board, the retail sales data just missed expectations. I'm seeing month over month, Scott, down 1.1%. They were looking for down 0.3%, but this is a bit of a miss and not the kind of miss we wanted to see.
That's a massive miss. And you know, Ben, you and I always talk about how one economic report doesn't really make, you know, a determination here. However, because we're so close to the next Fed meeting, to Jackson Hole, all the talk about Fed tapering, this one does stand out. It really does stand out. And I'm just curious how much this is going to impact, if it does at all, any of the Fed's decision on what they may do here.
Yeah, you know, this is going to be interesting to see how it's digested, too. Again, as mentioned so far, kind of a muted reaction, too. If we just pull up a chart real quick, because at the top of the show, we looked at the strong rally up in the ES. This is the 5-minute time frame again. Scott, we trended higher yesterday up into new all-time highs into the close, 44.76. We've just been kind of drifting lower, but here you can see holding above the most recent two dips we saw down into this 44.50 level. Now, the Russell, a little bit of a different story. Here you can see some of the selling we saw off the highs from up around last week, the 2252 levels. We broke down below 2200. But Scott, let's just real quick check in on, because I wanted to get your thoughts on the U.S. dollar and talk about what's playing out here in terms of some of the currencies, because the dollar had been, well, recently coming back under pressure. Let's just pull up a little bit more data here. Recently coming off the 93.20 level, but it's in a holding pattern. It seems like it's kind of waiting for a little bit more insight, more direction from the Fed, maybe from Jackson Hole, and certainly something possibly tied to this taper talk.
Absolutely. And you know, over the last couple of weeks, it sure looked like the dollar wanted to break out of that long-standing resistance area of about 93.5 or so. And, you know, it's pulled back a little bit, but it might be just a temporary pullback, Ben, because long positions in the dollar, they are at their largest level since March of 2020 here. So, you know, are we waiting for the Fed? You know, the dollar, the yen, the Swiss franc, all of the safe haven currencies, if you will, they've all really held in there over the last week or so, you know, based on the spread of the Delta variant, some really poor economic numbers coming out of China. And if you look at some of the other currencies, look at the New Zealand dollar, look at the Aussie dollar, those are all getting hit pretty good here.
Scott, you know, in terms of some of the focal points for investors, for traders, headed into the retail sales data and, well, into today's earnings and some of the other focal points that we've been dialed in on, a lot of talk about, well, you've got Fed Chair Jerome Powell at the town hall event today. They've got the FOMC minutes tomorrow. I guess the question here, does that sort of get looked past because of the focus being on the bigger picture here in terms of the taper talk and expectations that we probably won't get anything specific, at least until Jackson Hole?
I think it does, yeah. I don't think anybody really expects any earth-shattering, you know, of evolution coming out of today's town hall or tomorrow's minutes. Everybody is really pointing towards Jackson Hole, and it certainly looks like the market, Ben, is taking into consideration very well the fact of the taper is here and not down the road, not kicked down the road any longer, but that it's imminent. And the fact that, you know, okay, yesterday we saw, you know, ES down what, 0.5%, at its low of the day, rallied back. This morning we're down about 0.5%. With all of the negativity hovering over the marketplace right now, I think the market's taken that in stride pretty well.
I would have to agree with that statement. And a minute ago, you talked about the 6N, the 6A, which have, well, recently come under pressure here. Let's just take a look at the intraday look, the 15-minute time frame, some of the price decay we're seeing here as of the last couple days here. But, Scott, any other foreign currencies you're watching? We had been keeping a close eye on the yen. That bid seems to have slowed some as the indices continue to rally. There doesn't seem to be a lot of fear factor in this market, not in terms of some of those safe haven currencies, at least like the yen and the Swiss.
Yeah, I mean, the yen and the Swiss, they're bid just because there's nowhere else to go. That and the dollar. If this were a year ago, if we could go back in time and it was the beginning of COVID, these things would be through the roof right here. But their bid, they're just hanging in there. I'm surprised that, quite frankly, they're not stronger than they are. But other currencies, the Canadian dollar, a little bit weaker. But the ones I'm really focusing on, which are really standing out to me, are the New Zealand and the Aussie dollar, because they are all at their lows that they have been here in quite a while. Now, New Zealand dollar, with the news overnight that we saw that they're actually going into lockdown for 3 days now because they have their first case in quite a while. That is, justified. I think the Australian dollar is probably just along for the ride, though their central bank also came out and their minutes are very dovish still.
Yeah, and actually we're looking at some of the price decay here. I'm glad you pointed this out and brought this to our attention. And then in terms of the RBA, I'm sorry, it was the RBNZ, which is set to announce on the 18th. So that's tomorrow, and then into September it looks like the RBA Australia will be one of the first in terms of central bank activity. It's going to be September 7th, but looks like the RBNZ again tomorrow, so something to watch there in terms of the 6N. Now, if the 6N gets below that 6,900 level, into the middle of the 68 even, we'd be talking levels we haven't seen since the fall of last year, and it looks like the the 6A already taking out key levels, so into those fall 2020 levels. Scott, treasuries this week. Last I looked, not a lot going on there. It seemed like retest of the 50-day moving average, but it looks like right now we've got the July highs, the bonds 167.04 to keep an eye on. A retest of it in August got to 167, but about 4 ticks shy. I did see the 10, the 5, and the 2 take out those July highs in August, but it seemed like follow-through was somewhat limited without the longer data participating.
Very limited, exactly. It kind of looks, especially at the 10-year, that it wants to stay in this Goldilocks area of 130 to 135, which the market has accepted very, very readily here. I don't know if we see it moving that much. Again, I think that the market is anticipating the Fed to be a little bit more hawkish, a little bit more aggressive towards the tapering here, and it might be tough to break out to any further highs.
Yeah, I've got the 50-day moving average here, a chart. If we could just pull this daily time frame so we can kind of provide a little bit of a visual as far as mentioned, the recent test of and how we're holding up above the 50-day moving average. Just real quick, I want to just take a similar look here in terms of what's playing out here as far as rates. Again, just a quick look, a bit of a range that we've kind of settled into here, the 10-year in the middle, the 30-year on the left, the 5-year on the right. Scott, moving forward, economic data, I did notice some housing numbers here. That's certainly going to be a focal point for traders, for investors as well, as it's one of those areas of the economy that seems to have slowed at the very least, or at least got a little bit overdone and maybe a little bit coming off some of the extreme levels that we had seen.
And that's a good thing. In my opinion, that's a really good thing. It's been so hot for so long. We want to see a little bit of a cooling. We don't want to see, I don't think, the major kind of pullback, something like if you equate it to what you saw in the lumber market, right? You don't want to see anything like that, but a little bit of a cooling is a good thing. I think the market accepts that very well.
Scott, last but not least, we'll let you get on with your day. A busy one, to say the least, this Tuesday morning. Bitcoin holding comfortably between 45,000 and 50,000. The bulls have to be somewhat encouraged considering the recent rally we've seen off that 28 level. They were biting their fingers, nervous, to say the least, here around that most recent test of the 30,000 level. Everybody was talking about a breach of, and we could really open up the door to the downside. We found support, and we've rallied since. What comes next?
I think 50,000 is next. And, that's I wouldn't say that's a bold call, but what's happening here with this big rally right around the 45, 47 area is we're getting a little bit of a coiling. We're getting a little bit of a consolidation over the last few days, which is a good thing. So I think that really portends for that next move even higher, which should break 50,000.
Yeah, we talk about that acceptance. This is a very similar pattern in terms of what we've been seeing. The hourly time frame shows these well-defined areas of consolidations, this kind of stair-step pattern. If we could just pull this real quick, and you can see in terms of some of the price activity recently back to 48,100. These areas of consolidation, as mentioned here, acceptance of, well, this move that we've been seeing up. Here was that support that we found recently around 30,000. Scott, very much appreciate you sharing your Tuesday morning with us. this morning. Thanks to you, Scott, the CEO of Prosper Trading.